For some time, stocks have been rising at rather rapid rates. Corporate earnings have not been rising. Dividends have not been increasing. And it's not to be unexpected that perhaps a correction of some of those unusual factors on the upside might occur on the downside.
What's going on, everybody? Michael Silva here. You just watched Warren Buffett from 1962 in an interview that he had talking about the stock market. I found this interview to be relevant and very, very interesting, especially coming from Warren Buffett at a younger age. That level of maturity is quite amazing to see. So I'm going to go ahead and put that full interview down in the description below if you want to watch it yourself. Now, as you know, we've seen some pretty crazy price action today. Not pretty crazy, some very crazy price action. In a single day, it wiped away 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. In one day, wiped out 12 days of work to get up to its high level of 32, 33. You know, we talked about this in previous videos. We said the warning. We've said that a pullback from 100 to 200 points is on its way. We had overhead resistance in the sectors, in various sectors. And really what we saw was some sort of a blow off top in individual sectors. And then the price came back today to really retest the top of those levels. And now once resistance is broken, it then becomes support. The price action today closed at a pretty big level of support, which is 3,000. Now, mind you, that is a very bearish candle. So that's a lot of force in one direction. So we can see it definitely reach lower than 3,000 tomorrow. It's going to be interesting to see how it plays out because that was so forceful. So typically it's like a rubber band. When you see something get stretched out, you might get somewhat of a contraction. And mind you, there's a lot of liquidity in the market still, so you can still see it bounce from some sort of point and potentially even go higher. Now, where it laid out today is very interesting, right? So we were talking about the bulls cutting through the bears camp like butter. Okay, this green was the bears camp at a point, but now it's no longer. So it was the bulls camp when it came up here, and we're like, yeah, it sliced right through butter in just a few days. Well, I don't know what that is. That to me is more slicing through butter than these previous days. So I retract my statement saying that the bulls were cutting through it like butter because the bears today showed what cutting through butter really looks like. This was the support levels we were looking at. And boom, single day drop. It gapped down, okay? It gapped down below the support level we've been talking about, the 3130 to about 3100. We were talking about that as being the big area of the support zone, and the market did not even want to test that. It just gapped below it. Now, what's interesting about this gap, it's kind of like a blow off top, right? We had this gap up, okay? So this window is still open. Then it moved sideways, you know, right around here. And then instead of even closing the window, it just said, nah, gap below it, and then pushed itself down further. So we just still have a window here out of nowhere. It's a little island in the sky floating around, you know, a big blow off top that, yeah, can it get retested? Well, typically you see sort of gaps like this get filled. So maybe the price might, you know, come back down just maybe a little bit lower to that 68% retracement level. And then, I mean, there's so much liquidity in the markets right now being pumped up by the Fed. We might get that, you know, gap fill, or we might potentially see the market come back up to test the highs. It's still a very possible thing because you got to look at the context of the chart. It's still bullish. However, it's going to take some time to understand what the market is really deciding right now. I want to point out something very important about the price action today and how it mirrors up to how the original drop took place. So I first want you to look at these two candles and then this gap down right here where the market took off. It's very similar to these two candles, those two red days, and then that gap down. Now it's not identical, but I did want to point out the space between the gap that really created that forceful down direction. This gap, once measured, so what we'll do is if you measure the gap from basically the close of February 21st to the open of February 24th, that was a 2.3% drop, okay? Very similarly, if we go from the close of June 10th to the open of June 11th, Today, it was a 2.05% drop. So a very similar sort of price action, sort of movement on that gap down, that which created a lot of selling to the downside. Now, that I just wanted to point out, that doesn't necessarily mean it's going to start falling like a rock, but it is worth taking notice to see that type of price action, gap down, and then the forceful down direction. So if we continue to see this forceful down direction, stocks take the staircase up, they take the elevator down. Now I want to go ahead and throw up the Fibonacci retracement level just to point out some new areas of support and resistance on the daily. As you see in the back history of the chart, there was some price action craziness down here, and that's where we are again. So we might see that crazy price action take place around here and then work itself to move higher or work itself to move lower. Let's go ahead and just hop into the 30-minute time frame now to see kind of where the price action is heading and how it interacted throughout the day. Okay, so we are here on the 30-minute time frame. As you can see, this was today's price action. Pretty much just fell like a rock on the 30-minute time frame after that big gap down. Very bearish, but I wanted to point out one thing here before we hop into the lower time frame to see how price action interacted. Really, what the main point that I want to do here is these 4 days, each vertical line represents basically a day. So we had the 5th over here, then the 8th, 9th, 10th. Okay, so it gapped up. The market said they didn't want to go and they didn't want to test this area of resistance, so it just gapped above it. And then over here, it gapped way below. So this window is still just kind of sitting out here. It's a big island in the sky. These two black lines right here, boom and boom, those were our support and resistance areas. We were talking about how the price was coiling up and it was getting pretty volatile towards the end of yesterday because of the federal open market committee meeting. So it's been tightly coiling up within that range. So we said this was resistance up top, this was support below, and the market that said basically the hell with it. Instead of gapping up into the bear camp, I'm gapping below into what we were calling the bulls camp. Let's hop into the 15-minute time frame to get a good idea as to what took place as far as the price action throughout this day. Okay, so I just wanted to point this out because we were talking about the 3100 level being a prominent area of support. This is what I mean by support, okay? As you see, the price gap down and opened right here today. The price came all the way down on that first 15-minute candle, bounced from that point. It acted as support. And as you can see, the price action moved sideways. If you caught this intraday trading, you would notice that this right here is a bear pull. It gapped down. Now I did something very similar to this trade, but I did it with a bull pull within Boeing today. I did post that today on my live trading, but bear pull, as you can see, right? Gap down and then track sideways. This right here acted as a cliff, and then boom, when it busted down, it really started forcefully moving down. That right there is just, it'd been the perfect trade if you were to short it. If you were aware, if you saw this was on the 15-minute time frame. It was probably more prominent on the 5-minute time frame. And then as you can see, our two areas of support was the 3100 and then the 3000. Okay, there was really nothing in between that. So we literally said, yep, this one right there, and that was our bulls camp. Okay, our bulls camp was 3000 to basically 3100, and the price action moved all the way down, and it touched down about basically 3 candles before the close of today, and then bounced itself up to move higher. But there was too much bearish momentum to the downside, and when it came up here, it pushed itself all the way down to basically close right at that level of support, that $3,000 level that we've been really discussing and talking about. So this to me looks very bearish on the 15-minute time frame and even the 30-minute time frame. I want to hop back to the 30-minute time frame because there is some support and resistances now that we need to just map out really quick. Okay, so here's the 30-minute price action for the day. Really quickly, I just want to draw out this level of the trend. So keep an eye on this trend line going forward. That is going to be the resistance of this trend line. Notice how it acted as resistance here, came up, and it kept on kind of pushing itself around this level and getting rejected. Here, today's candle, the closing 30 minutes, you can see it came all the way to the top and then pushed itself all the way down. So if we see a breakout from this tomorrow, we will see the price potentially move back up to hit that 3,100 level, which is back up into this range. Now, if it breaks above that and closes, we might see the push higher to close that window that we were talking about. That would be at 3,185. That would be a pretty freaking huge move in just the single day. To, it was already very aggressive, so to see the price actually move that much, I'd be quite impressed. I do potentially see some sort of maybe like uptick a little bit, where we might see it come back up to the 3,100 level and then retest. So keep an eye out for these levels. Very, very, very dangerous times, so be very cautious of how you play it. If you are trading intraday, make sure you have tight stop losses and just trade with where the momentum is going. It could get very choppy towards the end of the week, right? Today's Thursday, tomorrow's Friday. We have expirations on contracts, on options contracts, and then it's going into the weekend, and it's going to be some pretty volatile movements, probably to the up and down. People are not going to know if they're going to want to hold shares in or just get out. So expect volatility tomorrow, but I would say keep an eye on the 3,000 level as support, keep an eye on this trend line as resistance, and then keep an eye on the 3,100 level. After that portion, if it keeps heading lower past the 3,000, the next level is going to be the Fibonacci retracement level of 68%, which we can see on the daily if we go back. That 61% retracement level is 29.33, give or take a few dollar swings. So just say 29.30 would be the next level if 3,000 breaks. As you can see, it closed just below the 200 period moving average, so it's very possible that we might see a move closer to the downside. Now, I want to throw up one more moving average on this time frame, which is the 20 period moving average, because the 20 period moving average helps us kind of see where the trend is moving and shifting. And if you go one far way off the 20 period moving average, you can see that retraction back. So let me throw that up. Okay, so that is the 20 period moving average. As you can see, it really kind of expanded from that, and in a single day it now closed below it. So this could be potentially a sign that a trend is reversing, so we're going to have to keep an eye on it. Now, this was not just some slow movement to the downside, so we might see it bounce around a little bit within the area or try to level out. So it's going to be very difficult to see where the price action goes until we get some more momentum. Typically, what you can see on the dailies or on daily time frames on this big bear candle, we might see sideways movement. That sideways movement might move into a farther down push, or we might see it move to a higher up push to test the highs still. So like I said, we have this area support, the 29.33. We still technically have the 3,000 range as support. Those are going to be the two to watch out for tomorrow. And then we're going to have resistance still here at this 78% retracement level at 31.34, which is basically 3,100, let's call it. We've been saying that, so I'll just say 3,100, which is right. Yeah. That is going to be resistance. So if I clear off all this noise, that is what it looks like. Two supports, we got a resistance. I don't see the price tomorrow just coming all the way back up and making and closing this gap. That'd be very aggressive in a single day, especially for a bull move. I would see more bearish action. At least that looks like more bearish action. But that's all I have for you on today's technical analysis on the S&P 500. We got the couple of areas of support mapped out. Keep an eye on. Obviously, be very careful with trading. It's going to be interesting to see how people want to play this, especially a lot of retail investors. If they see this as an opportunity to buy stocks on sale, I don't know if they're going to think that this time. I know they felt it back here, but I don't know if they're feeling that right now, which is going to be a big difference. The last thing I just want to close off on is I posted this later last night on the community tab. I don't know if you saw it, but the economy closed down right around this range right here where this blue vertical line is. And that was basically when we meet the bottom of the chart. And now what I just kind of find funny is that now the economy is reopening right around this range. Are we seeing the market top? So did we close the economy down at the market bottom? And did we open it back up at the market top? It's food for thought, something to keep an eye on. All right, everybody, have a good day. I will see you tomorrow on the S&P 500 Technical Analysis Update. See you later.